We are an African-focused uranium development company, 3 uranium projects in various jurisdictions of Africa. The company was started in 2007 in Niger. We've subsequently added projects in Zambia in 2016 and in Mali. Cautionary statements. We are a development-focused company, have been. We've taken our projects all the way through from exploration to 2 fully mine-permitted projects that are ready for development, subject to financing. We've done a lot of work on the technical sides. We've simplified our projects. We're currently taking one of our projects to final feasibility study, which is our Nigerian project ready for development. We're working on the debt financing and the offtake contracts. We've got a very large mineral resource, but I turned the drill rigs off back in 2013 because we already had a large resource, and it didn't see much point in just adding to that while the uranium market was in decline. We have one very interesting exploration play, which I'll touch on at the end of the presentation. So all Africa, we like working in Africa. Niger to start with, large uranium producer for a long time, the 4th largest producer, currently the 5th after Namibia went past it. Fully accredited, almost 150,000 tons now of uranium out of there. Standardized business law across the whole of Ohada. Zambia, obviously, a copper nation, a lot of mining skills, access to sulfuric acid. You know, Mali is now the 4th largest gold producer as well. So these are all mining jurisdictions. In Niger, the mining code hasn't changed since 2006. The last president worked underground at the uranium mine. They get the industry and where it is. You know, I look at risk, and recently, even in the Athabascas, the indigenous people are complaining about the uranium mines being developed. That's a political risk. In here, in Niger, we got our mining permit in 4 months. That's not a political risk in my view. Right, uranium market, we've seen quite a change around here. 2 years ago, the WNA forecast growth in uranium nuclear demand at 2% per annum. Now it's 2.6%. Heavily driven by development out of developing Asia, particularly the Chinese market, the Arab states. We saw an announcement today of Qatar investing into Rolls-Royce and its SMR development program. The UK, I think, is a really good example where you looked at where the UK was 2 years ago, really didn't seem to care about nuclear. Since then, we've had a $1.7 billion investment going into the next Sizewell C, $200 million into Rolls-Royce and its SMR development. You've had a complete financing structure change coming with a realized asset base structuring on uranium development at the UK that will halve the price required for the next uranium mine. You've seen the Americans taking projects from 40-year life out to 80 and now looking at 100-year life. You've seen the French going from 75 to 50% nuclear generation, switching that around and now going to build 6 new reactors. So the world is changing for nuclear. It is becoming very much part of the green energy story. And I think anyone who is watching COP26 will very clearly see a lot more acceptance. Interesting, the WNA were at COP26 for the first time ever at a COP conference. So that shows you a lot how governments are changing their view of where nuclear sits. But the key is the lack of supply coming out from the mines. Last year, just over 180 million pounds of uranium consumed. 120 million pounds was actually mined out of the ground due to closures of mines, older mines coming to the end of their lives. So it's coming from secondary. But secondary is declining fast. Half of that secondary is utilities inventories that they are drawing down steadily. That drawdown is being accelerated by investment funds. The most obvious and famous at the moment is the Sprott Uranium Fund, who just put $500 million into buying uranium since August, taken the spot uranium price from $30 to over $50. It's now settled down at 47. But I think the key thing that Sprott has done, talking to the utilities, is that while they don't see that as the key driver, the long-term driver is this complete lack of supply. But what Sprott has done is move the price up to a level that they can start negotiating contracts where the producers want to negotiate those contracts. They couldn't negotiate a contract with Cameco when the spot price was down at 30. They can at 45. But what you're also seeing is the utilities are now know that the supply side is closing down. we've seen a slow and steady acceleration of RFPs for contract. If you went before, there was no contracts written for the last 6 years for uranium, okay? That only changed a month ago that the first contracts were written. We started getting RFPs, just one a month, and now we're starting to see an acceleration of RFPs. That is very much way, and that's what's going to really drive the price here. The utilities, particularly in the US, from 2025 are uncovered. They have nothing to feed their reactors. They need material. They are concerned about supply diversification as well. So where's GoviEx? We're about building those mines to come in and fill that gap. We start with our project at Madaoela and then go to our project at Mutanga. Madaoela, right up in the Sahara Desert, right next to the urano mines of Cominac and Somalia. Good infrastructure, roads, power, water, people. Cominac recently closed, so there's a labor force available. We're taking that now into final feasibility study. We updated our pre-feasibility study in April. So while there's always risk of inflation, we've recently updated a project, so deferring some of that risk. And looking at how we simplified the project, we're looking at about a 50-50 debt to equity on this project. Expect to have this finished on a FS by Q2 of next year, looking to have it financed by the end of next year with production from 2025 onwards. But we have a second project. Most companies are one-trick ponies. We have a second permitted project. This is Mutanga. It's in the southern part of Zambia. This has already had 2 PFSs. We merged them together, had a very large resource increase on that one. We're infill drilling this. We're keeping this one about 2 years behind the Nigerian project, getting it to an FS straight off. Again, very similar all in. This is actually the lowest capital intensive project in the whole of Africa. It is a very simple project. We've got the Zambian government who are very keen to get diversification away from the northern copper belt. Zambia is one of 14 countries in Africa who's going nuclear as well over the next decade. And then lastly, the Falea Project. This was actually owned by a company in the last cycle called Rockgate, for those who are old enough to remember that. That had a $300 million market cap on its own. This little project of 30 million pounds uranium just shows where the cycle can take these projects to. What is interesting for us is that we have got copper and silver in this project. We're actually on 2 major gold trends as well in the area. So we've done some work on gold, really just to understand how that fits in with our project. But what is really key here is that see if this works. That is the uranium. It's in a sandstone hosted between the Birimians and the laterite. The reason I raised that is that it's fault structure driven. We've been doing IP work to effectively understand where to drill for the uranium and understand to drill for the flat-lying uranium. And then we suddenly realized, actually, we're now looking at potential for a polymetallic instead that is the feeder force for the whole of the uranium deposit, and there's a number of these targets. So we will be drilling that one next year as well to try and understand whether the real uranium project is actually here and not the flat-lying one, or we've got some kind of copper, silver, gold project instead going forward. It's an interesting interest to play. Development-focused team here. We've very much been structuring ourselves to go into the development phase, upgrading all our ESG programs as well as our board. We are well cashed up. We've got about $8 million of cash at the moment. We have a debt to the government in Niger, but that's a non-interest bearing. We've got about $5 million of warrants well in the money. So we're well cashed up and moving towards that development program for Madaoela. Value, real story here is if you looked at the previous cycles, if you went to 2004, 2007, in that cycle, the guys who made the real money were those who backed the developers who became producers. Paladin, the most obvious, going from 7 cents to $7.50. 2011 cycle, that was the cycle of the takeouts. The Africa takeouts, the cheapest was $1.2 billion for Mukujju River, the most expensive $2.4 billion for the Husab project. We are double the size of Mukujju River with double the grade. So really, last slide, strong uranium market, development team focus, large assets, they're permitted, they're ready to go. We're moving into the financing structuring on these projects. So thank you very much.